welcome to Fintech Focus TV with me, Toby Babb. I am delighted to be joined all the way from Silicon Valley today by Arjun Jayaram from Baton Systems. Arjun, how are you?
Very well, thank you. Good to meet you and good to be here.
Likewise, thanks so much for joining us. Listen, it's we are kicking off the first of these COVID-19 special series things that we're doing through Fintech Focus TV at the moment. Basically positioned to help advise and give help and spread some positivity of where opportunities are in the marketplace despite a really tragic and difficult time. Arjun's been very kind to give us some of his time. A business which has been growing since 2016, really exciting fintech company. For those of you who haven't been introduced to Baton before, Arjun, would you mind giving us a quick introduction to yourself and the business, please?
Absolutely. I'll go with a little bit of my background and then I'll talk a little bit about why we started the company. My background, I'm an engineer. I started writing a lot of code on databases and middleware. I actually was one of the principal architects at Sybase replication server, went on to build WebLogic for BES systems. And then I did a lot of startups. In the last 15 years, I've been doing startups. This is my third startup, the second one that I started myself, where I co-founded the company. So the story behind Baton Systems is, in my last company, I was lucky that the Chicago Mercantile Exchange invested in the last company. And I got to spend a lot of time with very senior people at the CME and understood capital markets in a lot of detail, understood what happens at the end of the trading day when assets move from point A to point B. They also introduced me to about 30 different banks. And across the banks, I got a wide spectrum of the problems in capital markets, primarily focused on FX and movement of securities, and realized that there was a big problem. It was not a very well understood problem, but it was a very big problem. The techniques and technologies that the banks used were over 30 years old. So it introduces two major categories of problems for everybody. One, payments are slow and payments are expensive at a very high level. And the market that you're talking about is the amount of money that banks spend to solve this particular problem globally is somewhere in the order of between $60 to $80 billion, depending on how you count this thing every year. And you did not have a consistent solution for this particular problem. So whenever you have this kind of a thing, I realized that there was a big opportunity to solve that. I looked at the blockchains of the world in a lot of detail, having come from a database background. And I came to the realization that, look, there are some really interesting things about the blockchain, but fundamentally, there was a different way to solve this problem. And the difference here being you can actually move real assets sitting in real bank accounts faster and cheaper. So that was the whole thesis of starting Baton. That was over three years ago, a little less than 4 years, between 3 and 4 years ago. Fast forward today, we are live in production in multiple of the top 10 banks. Like when I say live in production, it's actually, this is a system that's moving assets on their behalf. We settle on a steady state. We used to settle anywhere from $15 to $20 billion of asset value a day. And in the last 3 months, in the last 3 weeks, since the market volatility, that volume has actually doubled. So we are settling somewhere in the mid 30s to $40 billion of asset value every day. We consistently settle over 10 currencies, and we do a whole spectrum of securities today. So that's what the company does. We offer a SaaS-based solution that moves assets faster. We synchronize and orchestrate the movement of assets between institutions. And the end result is that those assets move faster and it moves it cheaper. To give you a scale of how much faster, a process that used to take somewhere between 24 to 48 hours, we are consistently able to do this in under 3 minutes today. And that is a big saving. So essentially that releases a lot of liquidity pressures to that businesses face. Your assets were stuck for 24 hours. Now you get this in 3 minutes. In the case of securities, it used to take somewhere from 12 to 16 hours. We're able to do this in under 4 minutes consistently.
That's excellent work. And I think it's testament to a lot of the businesses that we're seeing globally being successful at the moment with a team that's been there and done it. And I look at the team that you've already collected around you, and it's a world-class crew. We look at solving issues which are genuine issues around it, and you'd be able to see that and provide speed, which I think has always been one of the key things that we're looking at within the capital market space is a genuine value. I mean, I'm interested in a lot of about your business, but particularly the fact that you sort of raised recently around $16 million so far through funding, etc. You're in Silicon Valley, where you are at the moment. You're in New York, you're in London, and you're over in India. So you've got a real global view of what's happening in the marketplace at the moment with the crisis that's evolving around us. Tell us a little bit about what you're seeing and how it's impacting the business. You spoke a little bit about volatility up, and there's obviously opportunities within that as well as everything else. But tell us about your view of how things are impacting you and how you are pivoting the business, if you are, or how you're exploring those opportunities at the moment.
First of all, I want to start out by saying that this is a terrible human crisis. Nothing that we've not seen in generations. So we have to acknowledge that. It also means that it's not going to be business as usual for a very long time. Businesses will have to change. Businesses will have to adapt. And those who do not adapt and just make peripheral changes are probably not going to exist. So one of the things that we do see is this basically has shined the light on liquidity, whether it's for a small institution or it's for a large bank or a mid-sized institution or for a very large bank. The access to capital and the access to liquidity is such an important thing in this environment. You make sure that your money in, your cash in, and your cash out. If you don't manage this well in this new environment, it's going to be very, very brutal. That's the fundamentals of this. Liquidity being number one. Also look at the risks that are there. I mean, if you think about it from a small business, and then I'll expand this back into the bank. A small business, when you have a lot of monies that have to come in, or you have a large concentration risk of one or two customers that is coming in, that creates a risk in the company. And the same thing for the banks as well. And they're trading it on a global basis. And for them, liquidity has just become the number one thing. The second one is settlement risk, but primarily liquidity. In this crunch, you're seeing market volatility anywhere from 5 to 6% every day. And that basically means that your margin calls are going to be all over the place. Assets are losing value, which means your haircuts are changing on a regular basis. The other intriguing thing that just happened is how the currency markets have fluctuated in the last 3 to 4 weeks. It is contrary to every expectation. The dollar has actually strengthened against every major currency. Now, what this really told us is that if you look at it from a global perspective, the dollar is still the most valued currency at this point in time. So basically, everybody has pegged their assets onto the dollar. And despite the Fed going in and creating a huge stimulus package, on the contrary to expectations, it's actually created a shortage of dollars, not an excess of dollars in the marketplace. So there is actually a supply problem of dollars. And it's not just dollars, every asset, there's a supply problem. Fundamentally, this comes down to liquidity. Every bank has been extremely careful about their liquidity and where they put these assets. It is in these depressed times or stressful times, because you basically have a process that is stressed. It is in these stressed times that access to capital becomes extremely important. And if this is tied in some process that's taking way too long, that is going to be a huge problem. So I want to bring this back to every business. I mean, look, this is a humanitarian crisis, and this has actually stressed out a lot of things. We believe that as a business, you should be looking at cash flows. At this point in time, everybody has to be looking at cash flows, whether it's a small business, medium business, or a large bank. And it is actually manifested in the large banks in the case of liquidity and in the case of settlement risks.
I think it's a really interesting area of it. I think if you look at what one of the critical parts of of what's happening in the marketplace is at the moment, that sort of cash flow and liquidity is without question one of the most important things to business, full stop. So your insight on that is really valuable.
Yep. So we have a lot of views into what is happening in the FX markets, and we also have it in the cleared markets. So let's talk about the FX markets. In particular, in the FX market, what we're seeing is that we've seen this for the last 1 year. We look at the type of trades that we look at are spot trades, futures, and swaps. The volume of swaps that has happened has really, I would say, it has more than tripled in the last year, the amount of volume that we see. But we may not be representative, but I look at market data, and swaps has increased significantly. And when we double clicked on this one, when we dug in a little further, what we observed is that banks start using swaps, FX swaps, any kind of a swap business as a means to generate liquidity in the short term, be it 30 days, 90 days, 30 days, 60 days, 90 days, even for very short ones of as much as a week. You need that liquidity in a particular currency, in a particular market. You do not have that, and so you enter into a swap. And a swap basically says, I will give you assets in my local currency, and I want to borrow assets in your currency. And that has got a basis points, right? There's a difference in that. The larger the difference, the greater the greater the spread, the greater the problems with the supply and demand. Either there's greater demand or there's shorter supply. I mean, that means that there's a big spread in that. We're starting to see those spreads. In these times, you're actually starting to see those short-term spreads actually increase. Contrary to all expectations, you would expect when the interest rates are dropping, you would expect that these things would drop. It actually did not. It's actually increased in that, which also shows that there's a huge problem in supply of major currencies. The GBP is actually stronger. The US dollar is actually stronger in these points in time. And when we looked at that in a more detail, so yesterday, the Bank of International, the BIS came up with a very comprehensive report on that. So what has happened, what we believe has happened, and this was emphasized on that as well, is that most of the Asian countries or the emerging nations have got their assets primarily pegged to the US dollar. And when you have a market volatility like this, you want to hedge against that US dollar because you don't know how your currency is going to do vis-a-vis that. And the way you do that is you enter into swaps. You want to enter, you hedge your asset values against swaps. It could be corporations, it could be which have a lot of multi-currency earnings in that, and you want to peg it against a dollar, and so you enter into a swap in that particular one. So we have seen a tremendous increase in that swap business, the volatility in that swap business. We look at the spreads; those spreads have increased in that business. But fundamentally, for a bank, every swap has to be settled on a particular day, which means that you only have so much capital, but you have a book of business which has tripled in the last year, which means that you cannot, as a bank, you cannot lock up your capital in processes that take up too much time and tie up too much liquidity. Anything that takes up too much time ties up too much liquidity. So it is interesting that we have seen a greater use of our platform in these stress times. And the way we see the greater use is that the throughput of the system, the amount of money that we process in a unit time, and I say the unit time being 1 day, we have seen that double in the last 3 weeks. And that is pretty huge. And the amount of swap trades that go into the system has also increased in the last 3 weeks. We're also seeing at this point in time, in the last 3 weeks, I've actually had more demand for adding new nodes, what we call new nodes, Middle East wanting to come onto the platform much quicker, a process that used to take many months to onboard. Bureaucracy is on the side now. That's the other interesting thing that has happened. This has shined the spotlight on a lot of inefficiencies, and typically banks put us through the sandbox, and it takes 3 months to get out of the sandbox. This is happening in weeks now because people are realizing that they need this now. I mean, you're talking about vaccines that take 18 months is coming out very quickly. FDA approvals that takes 18 months is happening in 3 weeks. Same thing is happening in banking as well. If it is important, and if it's important, it's important this time. The spotlight shines in these times of inefficiencies.
Yeah, I think that's a really interesting thing to add on to this as well, isn't it? Because there are great opportunities and benefits that will come from the most tragic of times. And I think if you see stories like that of where efficiencies can be made, what other things do you think will be the positives that will come through from this? Where do you think this will make fintech and banking better?
Yep. So this has also highlighted liquidity is one problem, so access to cash. So anything that increases the speed of movement of assets is going to be very, very big for anybody. Right from a small business, medium business, large business, that's going to be very big. So anybody who's in the real-time payments, real-time, making those accounts receivables, accounts payables, make that faster is going to benefit. And remember that it's not just technology there. There's also people involved in that. So anything that makes this into an STP process is going to be a huge one. The second one is risk. The risk appetite has reduced. A market like this, people don't want to take risk. When you see a portfolio shrink, you want to be making sure that a trade that you got into or an obligation that you have from somebody outside in the market, they're actually able to meet that one. And that's a very important thing. You should be able to, first thing is measure risk. The ability to measure risk was not that is not a uniform thing in the marketplace. How do you measure a risk of a trade? And so the real-time measurements of risk is important. The second one is, once you can measure risk, you want to mitigate it. And how do you programmatically mitigate that risk? Let's say I have $1 billion of exposure at this point in time. How do I know that that $1 billion is $1.1 billion an hour from now, or is it 900? So the ability to measure risk in a real time becomes extremely important for an institution. And this is it's not an easy one, especially when you're a global business and that each one of those global businesses are trading independently of each other. Measuring that at a centralized level, at a unit level, and also at an aggregated level is a complex process. And that's something that we were lucky that this was something that our businesses, our customers had asked from a very beginning. So this is how we had architected our systems, the ability to measure risk and exposures and obligations in real time. Once we were able to measure it, the next question that we asked is, how do you mitigate this? And so, if I'm a bank that is trading with 10 other banks and I can see that my risk with a counterparty is increasing and I want to limit this, a process they used to do this once a day, settle this once a day. The way you mitigate risk is you settle that exposure and obligation, and then you zero it out, right? But in order to zero it out, you need money. So that's where liquidity comes into play. So the first thing is you measure it, you mitigate it, but in order to mitigate it, you need liquidity. So the thing that we did is, in order to mitigate it, we gave them many options. A process that used to take only once a day, they now do this 18 times a day, which means that they do this in smaller chunks.
Yeah.
So that was a big one, right? I mean, and they do this, they want to get this to 24 hours completely programmatic. And they want to even say, you know what, this is the amount of risk that I can take. Anything, if it reaches that amount, settle it. Right. And so it's called a programmatic or a threshold-based settlements. Why 18 hours? Don't do this on a batch basis. Just keep doing it. As long as it's below this threshold, you're good. But if it reaches a certain threshold, force a settlement. So that's the other pieces that we've done. And in order to settle, at the end of the day, you need currencies, you need assets. And sometimes you do not have these assets. An example is Turkish, Polish. These are currencies that actually have a limitation in supply, which means that I do not have that money at this point in time. So one of the things that we did is called shaped payments, which is you actually break it up into smaller chunks that you can make out. So we approach these things and we are able to deliver value. And once we are able to deliver value, despite this crisis, we are starting to see a lot more engagement with the platform and a lot more engagement from the markets on the user on needing this a solution like this.
So tell me what you're seeing from a government standpoint. I think in the UK, we've seen a lot of government support for businesses. The US, I understand, has been a little bit less forthcoming so far. What do you want to see evolve with the way that governments are supporting companies through these times, particularly in the fintech space?
Yeah, I think the first one is governments realize that it's not going to be business as usual. So I think there's a short-term uncertainty, and that uncertainty is everywhere because, and this happens, the market, the crisis is evolving, so you have to respond to the crisis. But it's not reached a steady state yet. So we believe that, knock on wood, we believe that it'll probably reach steady state sometime in June. And that's when you can realize the effect of the damage that it's caused. But in the meanwhile, you need to stop the bleeding. So the way I look at this is all we're doing right now is just first aid. It is just addressing the bleed that's going on right now. So you're right. At this point in time, it's just addressing the bleed. And we're talking about, banks are coming. I mean, the government is coming in and saying that we can help you manage the crisis for the next 10 weeks. And that's it. Just don't let people go and just manage. It's just a band-aid at this point in time. We still do not know the effect or the depth of the crisis that it's going to cause. We know it is going to be deep, but we don't know how deep and how broad it is going to be. And the broad part of it is also important because it shows you what sectors of the economy it's going to impact. We do know that it is going to impact banks. And banks are important because I think it's a fundamental backbone. Capital markets and banks are very important for any organization, for any country. It's an underpinning of the economy. It's one of the backbones of the economy. You can't shut down capital markets and have a fully functioning economy in that. And banks are a very important part of that. So you need to make sure that the banks, I mean, no matter what it is, you need to make sure that banks survive. And banking system at the heart of it is just a trust-based system. If I do not trust a bank, then the whole concept just falls. And that's going to have a catastrophic effect on that one. So central banks have been very, very cognizant of it. They have kept an eye out for this one. And the way they have addressed this particular problem is, one, they have said, we understand you're going to face a liquidity problem. We will help you in that liquidity problem. The second one is, today we looked at a bank and they said, we understand that you're spending a lot of time in regulations. We'll give you relief on that regulations at this point in time. We'll give you relief on the stress relief, on the stress tests. You get a little more time, address the problem right now. The third one on the liquidity, and the third one is actually saying that you understand, at this point in time, we understand that you have assets which are primarily bonds. We, the Federal Reserve, will be the buyer of these bonds, giving you further liquidity into this market. So don't worry about depressed stocks. We know that things are highly volatile. We, the Fed, are going to come in and be the stop, and we will be the buyer of these assets. Even if it's a depressed asset, we will be the buyer of it, thereby giving you liquidity in the marketplace. This is very important that all central banks are realizing that, especially the Bank of England and the Federal Reserve, and EU. These are the important ones. I mean, these are the important open markets in the marketplace. So it's very important that central banks intervene on that and show confidence to the markets. The second part, the point that I want to make is that this is not going to be a one-time. We believe that it's going to be a series of things that will have to be done. It's not going to be business as usual. There will be a shrinkage in the GDPs of multiple countries. And if the central banks don't intervene, it can quickly go down into a depression, not just a forced recession on this. But I'm very confident of the steps that are being taken are very deliberate, extremely thoughtful, providing liquidity in the marketplace, understanding that there is a risk in this, and therefore we will be the backstop for this risk. We, the Federal Reserve, or the central banks, will be the backstop for this. You're also seeing, for the first time, central banks actually coordinating with one another in a very well orchestrated manner. And it's really nice to see people are putting the global politics on the side, especially at a time like this. People are putting the global politics at the side and saying, we realize that this is a global pandemic. And we are not a small, you can't say that what happens in China is not going to affect a small market in China is going to affect the whole world now. This is the new world that we're going to live in. So central banks have to collaborate. And so this is forcing collaboration across this. So a lot of good things that are happening out of this. Banking, as you know it, is probably going to change for a long time. Access to capital is going to change. It's going to be more critical to have access to capital at these points in time. If these things continue, I can think of, in a few years from now, I would predict that central banks will be open 24 hours a day. Why not? Why do you have to stop trading at the end of the trading day? It's just highly volatile. I think these kind of crises highlights the need for 24-hour access to capital.
Yeah, it brings there's a number of positives that I think can come out of the negative that we're experiencing at the moment, and that sort of evolution, that collaboration, I think has been absolutely prevalent across all industries, and from mine through to finance itself, and through to global banking, global politics, and it's been something which I very much hope that we can keep hold of as things continue as well. I mean, I'm interested to sort of change tack slightly here. And I know that we're sort of running on time, but I want to keep this because I think it's really interesting. You're a business that's well timed in terms of its investment, and had that at the start of the year. You've had what I think we've talked about as cautious growth as a business so far. Where do you go with this, with everything that's happening economically at the moment? What happens to your plans for growth now as a company, and how does that impact things? And if you are growing, how do you get around that, and how do you make sure you're onboarding people and keeping that collaboration of everyone from working at home and everything like that as well?
So there are a few questions in that one, though. Let me address the first one, which is how do we manage this risk at this point in time? I mean, let's just face it, it's not business as usual. The first one is to acknowledge that it's not business as usual, right? It means that you have to, as a small business, you have to manage your liquidity, which is your access to cash has to be managed extremely well. And for a startup, for a small company, the cash in bank translates to number of months you can survive. That's it. That's all you have.
Yeah.
You could be the best company, but if you do not survive within that time, your time is out. You're out of time, and so you need to make sure that you don't run out of that one, right? It's extremely important on that one. So, and we don't know how this crisis is going to evolve, and what the depth and the breadth of the damage that it's going to do in the secondary economy on this one. The first signals seem to be that banks are going to do okay, despite the fact that the interest rates are lower. Banks are going to do okay. That seems to be the first signal. We don't know anything else at this point in time, because we will get a better picture of probably in 60 to 90 days. But today it is very, very foggy, but at least it seems like the banks are going to be okay. The second question that which means that during this time, you have to be very careful about your liquidity, access to liquidity, and making sure that the liquidity actually stretches out. One of the things that we do is that, we do not know how this is going to evolve. So one of the things that we have looked at is every project that is there, making sure that it's going to be ROI positive very quickly. Look at every investment. Look at every investment that you have made, just like how you would look at your portfolio of stocks and saying, which ones do I keep and which ones is too risky? It may yield it, but I may not be around. My portfolio may not be around. So we take a look at everything that is there. Now, the good thing is that we have been doing this not just now, but we've been doing this from the day we started the company. We've never built it hoping people would come.
Yeah.
We were lucky that our customers have asked us for this, and only then we have built it. And we've only added people. One of the things that I've been very, very diligent about is only adding people at just the right time. It has been painful. Only when we feel the pain that we cannot take it with one person do we add the next person. So we are right now at 42 people, and at this time we hope to be able to grow. But in that growth, we are making sure that we may have to relook at where we go and how fast we grow. It is very clear that R&D is going to be the number one thing, right? We have to build the product out. There are more features that our customers are asking to mitigate risk and address liquidity. So that is how we are planning to expand. We had a plan to expand into Asia end of the year. We'll have to reevaluate that. But what we do know is that there's a demand for the product at this point in time from Americas and Europe. Let's take that one at this point in time. So that's the focus of the company right now. The other question that you asked is, how are people adjusting to this? I wrote a LinkedIn post. The first one is actually acknowledging that there was a problem. I would say that I was probably a few days late in this, but I had to come to grips that, look, this is not business as usual. So about I would say about 17, 18 days ago, I basically made a call that everybody's going to work from home globally. Before, that was about 10 days before even California announced the working from home. We basically said, business continuity plans is now going into effect. Okay, we actually had to look at our business continuity plan and said, this is in effect starting next week. We had to force it onto people, and our team in India was like, no, we don't operate that way. So there was a lot of social awkwardness in that one. But we just said, no, this is not how it is going to be. We'll give you 2 more days. They tested it out. They actually tested it out with different teams, because especially did you have access to Wi-Fi, high-speed Wi-Fi in different suburbs in India? People had to go home. They couldn't stay in the same place. They just had to go home. And so when you go into the different suburbs where internet connectivity is all uneven, we just had to test it. So a couple of days, we just tested this thing and said, we're good. And people started working. Now, the irony of this one is I was expecting productivity to drop. The productivity, believe it or not, was 150%. I was actually measuring the productivity in terms of the check-in code, the throughput of this, the number of meetings, etc. The productivity was 150%. Now, I don't say that as a positive. I don't say that as a positive. I wish I had controlled it, because actually what has happened is that we are starting to see burnout. We are starting to see burnout of this. People are not, at this point in time, this is new world. The ability to differentiate work and home was not that apparent. I was ending up working 16 hours every day. And if I was doing it, I should have realized that others were doing it as well. And we were starting to hit burnout. As of last week, people are starting to be tired, not eating as much. And so we are starting to see other side effects of it. I want the productivity to be no more than 110% and actually force people to take some time off. They're actually doing things like virtual hangouts for coffee time, beer time in the evenings, in different ones globally. And this has proved out to be nice, where we decide not to talk about work. One of the things is that the mandate says we do not talk about work. You know, it's a new world. I mean, having your kids in the background in a video call is going to be the new normal.
Mine have been very good. Mine have been very good for this. I'm going to reward them at the end of this. I kind of figured that we'd be interrupted a couple of times, but we've got away with it so far.
I think that's the new normal. I think, you know, my wife works for Cisco, and Chuck Robbins, the CEO, said, if the kid screams in the background, let it be. That's the new world. As long as it's not affecting your work right now and it doesn't bother you, that's okay. You know, that's the new world that you're going to live in. In fact, that's, you know, it also showed that maybe we don't need these large offices anymore. The workplace may change a year from now. You don't need those fancy offices. It's probably going to be, you know, you could make do with half the space and work 2 days out of the 2 or 2.5 days from home. It's going to be a remote workforce.
I think that would be
just showed the light on so many different things, which we did not think, we took it for granted that that's how it's going to be. And it's opened up a whole lot of questions. Why did we have to do all of these things? It is an eye-opening thing for me. It also comes down to the core values, which I wrote in my LinkedIn post. A lot of the core values were tested again. Do you trust each other? So our core values when we started the company was honesty, hard work, and trust. And it comes down to that. Once those were re-emphasized, and we make sure that every person that we add, it's compatible with that trust system that we have, the trust framework that we have. And it just worked out really great. We were there for each other. We were there for the customers, and the customers were there for us. That was very important. The customers were actually there for us. They were telling us how to prioritize our works. So we built that one, and I feel very good about that.
So let me take. There's an interesting part about this as well, because I think those core values are absolutely what gets tested at this sort of time, and it's great that you have those as a business. As it continues to grow, with, you know, let's say the new norm is a remote workforce and such like, how do you keep that? You know, people know that because they were there and with you as that sort of developed. As that gets more disbanded, how do you feel that can impact those values as a business?
Yep, I think we have to go back to the drawing board and look at our core values and look at how we do business. What this has shown me is that it's not going to be business as usual. Accept that it's not going to be business as usual. You wrote your business plan based on business as usual, right? We did our business processes, and your business plan was based on business as usual. This is not business as usual. All I know is that we do not know what the new business as usual is going to be until about 3 months from now. All we're doing is adjusting in the time being. Every business that wants to succeed and thrive in this environment will have to look at what does status quo mean in the new world. We will be doing that as well in the next 3 months. One of the things that I do see is that working from home is going to be the new normal. You know, it puts into question, do we need all this office space, this amount of office space, and this much of office improvements going forward? When it really does not matter. What you really need is a very strong internet connection and an extremely good laptop and good monitors and keyboards on that one. That is a new norm. You need that one. Make sure that you get good chairs and desks for people, not just in your office, but also for their homes. So yes, we will be looking at
people buying desks.
That may be the new norm. I mean, that may be the new norm. And what I'm thinking about this. Do we actually say that, look, you have to designate a certain area in your house for this one? And maybe we adjust that. You don't need to pay the rents here. You can actually subsidize on the other side. And that may be the new norm. Why not, right? I mean, you're paying the same thing. You actually have access to this. And if your trust system is good, because it can be abused. That's why it comes down to the core value system that you have. Everything is going to be tested in this new environment. So yeah, I think that's my meta point here being anybody who does not look at their new status quo in 3 months is going to be in trouble. I hope for businesses like us,
agree with that.
Yep, for businesses like us, it means that we will have more customer demands. I mean, there will be a better growth of better book of business for us. But unless you look at the new status quo, it's going to be tough.
I absolutely agree. Listen, we've been speaking for way longer than we scheduled, but I've loved every single minute of it, and thanks so much for sharing. So I could go on this for another hour. I'm sure. It's been fascinating to hear your appraisal of the market. There's some brilliant things there to share. And I hope everyone who's been listening has taken something from it as well and can start to think, I think, a little bit differently about what's to come next and how we can move our business and move our thinking to make sure that when we are through the worst of this, that we can continue to thrive and see a much better future for the economy, for world politics and for the businesses in the banking sector. So Arjun, it's been absolutely fascinating speaking to you. I'm looking forward to shooting another one in a couple of months when everything's gone through, and it'll be really interesting to get a little bit more about the business and how you guys are doing. There's going to be people here who are really keen to find out a little bit more, because I think you add real value, as you can see at this sort of time. If you're accelerating payments and that sort of world, there's going to be a lot of people who out there who will be hearing from you and saying we need to be speaking to Baton at the moment. So tell everyone how they can get in touch with you, if you would.
You can go to our website. You can send an email to info@batonsystems.com. Our phone numbers, 1-800 numbers are there. And also look up our LinkedIn profiles. Connect up with me, connect up with Andres or Alex. Anybody we'd love to have inbounds. A lot of our customers have reached out to us through LinkedIn's. There's not a whole lot. We don't put a whole lot out there on our website, and that's all intentional. Except there is ways to contact us. We'd love to hear from you. Please reach out.
Fantastic. Listen, thanks so much for sharing everything you have so far. It's been fascinating getting to know you. Thank you to everyone who's watched and tuned in to see this episode. We'll be having another one next week as well, and we will look forward to seeing you all soon. Thank you all very much for watching. Cheers.
Thank you very much.